It looks like we are live, and it's now 6:02, so it's time to officially kick off the Smart Exit Bootcamp so we can address with all of the presenters here with us today the smart way to get prepared for and be ready to expertly go through your divorce. So I'm going to do formal introductions as I go along, but as you may have figured out from the event page and your invitation to join this tonight that I'm Deborah Whitson and I'm just the host and facilitator of this. And we're going to kick things off right away with Melissa Murphy Pavone, who is a certified financial planner and a certified divorce financial advisor, or sorry, certified divorce financial analyst. And she helps couples and individuals navigate the financial complexities of divorce with clarity, structure, and order to bring them out of financial chaos and approach their divorce in a smarter, more informed way so they can make good decisions through that process. So I just want to say before I turn this over to Melissa, who's got some great information to provide, is that amongst the professionals presenting today, we are sharing information. We are not giving individualized legal advice, although we would be happy to do so if you want to connect with any of these professionals after the presentation has concluded. We'll give you contact information on how to reach out. So that's my disclaimer. After all, I am a lawyer by training, and so it's not unusual that I'm giving that disclaimer at the outset. But I'm going to go off camera and turn this over to Melissa, and then I'll be jumping back in as we switch from speaker to speaker throughout the program tonight. But I'm so glad you all have taken time out to join us. And if you aren't joining live and you end up watching this as a recording, we're happy that you found your way here. So Melissa, take it over.
Thanks so much for having me. I'm honored to be here with everybody. I am Melissa Murphy Pavone, certified financial planner, certified divorce financial analyst, and a lot of people don't even know what that is. So a certified divorce financial analyst really helps on the financial side of divorce. So we can analyze divorce settlement options, help you understand the tax implications, project the long-term financial outcomes. And I think that's really important, being that there's so much unknown when you're going through this process, right? We don't know what it's going to look like. We don't know how we're going to afford it. We don't know how household, two incomes now have to support two households instead of one household. And I think that's where people sort of become in that flight, fight, or freeze standpoint. And a CDFA can really come in and help to create that clarity. I talk about clarity a lot because divorce is a very emotional process, but it is very much a financial one. And we do not want anybody to make long-term financial decisions in heightened emotional states. And I always preface this with, I really believe that there should be a team approach to divorce. I think that the emotional aspect is very important. I'm a big proponent of financial coaches and mental health professionals to start there, and then come to a CDFA, right, to help get those numbers. And we're going to talk a little bit about what those numbers are and why they're so important. And then once you have, you're emotionally stable and you have some financial clarity, then to find somebody like Deborah, right, an attorney and mediator that will help you with your legal strategy. I think that's very important to have three people, if not more, supporting you throughout this process. So the numbers that I talk about that are so important, we'll go through them. And there's 5 numbers that I really like to dig into when I'm working with clients. The first one being your assets, what you actually own. And that's really important because people don't always know what is in their name. You can be living in a house that's not necessarily yours, right? You could be living in there, but it might not be, your name might not be on the deed or the title. So we want to know what you actually own. Dates are important, and titling is really important. The next number is your liabilities, and that's what you owe. And a lot of people don't necessarily know what they owe, right? What's open in their name. Oftentimes there are people who don't even know who they're mortgaged with, and that's okay. There's no shame in that. I will help you figure out all of those numbers and where the documents are and where we can search for them. But you want to know what is outstanding in your name, what your liabilities are. The next one is how much you earn, and that's what you make. right? You need to have a clear understanding of your income. And that's really important because moving forward, if you are going to be dividing, we have to make sure that the cash flow makes sense. We can draw up this amazing divorce settlement, but if you don't have the income to support it, then it's just words on paper. So I really try to meet my clients where they are, so to make sure that we have a real important, a real good handle on our numbers so that it's realistic. The fourth number that we talk about is what you spend. And this is a hard one because we don't always know what we spend, or we don't always want to know what we spend. But I think it's important to know what that cash flow is, because the truth of the matter is divorce is expensive. And there are going to be some one-time expenses and some additional expenses moving forward, having two households. And we really want to get clear on those numbers so that we can make confident decisions moving forward. And quite honestly, we might have to make some lifestyle changes moving forward, and that's okay. But we're going to peel back the layers of the onion and we're going to find out what those numbers are, and you're going to feel good about it. So I know it could be a little scary at times just thinking about it, because not everybody is a numbers person, but I try to make it fun and light and create a space, honestly, where you feel safe to ask questions, safe to say, I don't understand. Can you say that again? Because you really want to understand these numbers. The next number that's really important too is your credit score. You might not know what that is, but you want to know what your borrowing power is. And that's important, right? If we're talking about a refinance, or if we have to relocate, or if we have to buy a new car, there's all these things that are what ifs. So once we get a good handle on those numbers, together we can build a marital balance sheet, right? To see where are we right now and what might this look like moving forward, right? So we want to have those guardrails in place to sort of say, hey, this is the best case scenario, this is the worst case scenario, knowing that we're going to fall somewhere in between, and really thinking about what your priorities are and what the other side's priorities are, right? And that's important. People often say, why do you want to know what my ex's priorities are? Why are you asking so many questions? But it's important, right, as part of the strategy, to know who values what and how we can come up with a settlement that doesn't necessarily have to be 50-50, right? But that has to be equitable and fair, but getting to the important points, right? So sometimes there's things that are more important to other people, and that might decipher whether, on what everyone's age is, how long they are from retirement, if there's any health considerations to consider, if their earning potential varies. So we get financially naked together. I want to get all of the information, because the more information I know about you, the better advice I can give you. And that's really important moving forward. So if you are working with a CDFA, even if it's not me, be truthful, be honest, give them all the information that they need so that they can give you the best advice possible. When we go through, oftentimes people ask me sort of, when do I hire a CDFA? And I'd like to think that the earlier we get involved, the better it is. But the truth of the matter is, when you feel like you're stuck, and that often happens sometimes in mediation or divorce, where you're sort of on a good ramp up, and then there might be one issue that you're just sort of stuck on and you guys can't get over it. Sometimes it's financial, sometimes it's the house, right? You can bring a CDFA in through that process. And so it could be before filing divorce. I like to offer a package for those quietly thinking of divorce. It's a 3-hour limited scope package to really get organized before you have the conversation, right? Get your ducks in a row. And I think that's really important. We can come in with an attorney or mediator during that process and help get you to the finish line. And then also just like a review attorney, we can review the settlement or the proposed settlement to make sure that there's no blind spots. And I tell people that I want to be their eyes and ears for them, for their financial side of the divorce. And the truth of the matter is, a couple things happen when you're going through divorce because your nervous system is so unregulated. Oftentimes our body reacts and we are in fight, flight, or freeze mode. And when we're in fight mode, we are illogical, right? We are fighting for things that don't make sense. We are spending money and time and energy on things that are not going to move the needle. And so as a CDFA, I can say to my clients, and I'll be really honest and say, hey, you know what? We're going to spend $5,000 in legal fees going back and forth, fighting about a $3,000 couch. Like, this doesn't make sense. And sometimes you need to hear that, right? And sometimes you need somebody to be that voice of reason for you. When we're in flight mode, it's sort of like we are at the end and we want to just give up because we're tired. And divorce is exhausting. It's expensive, it's emotionally draining, it's financially, but you don't want to just give up, right? Sometimes at the end, that's a tactic that some people use on the other side to wear you down. And I'm here to tell you that, as a CDFA, we will tell you and we will be honest with our clients to say, okay, it's fold it, like, let's be done. I can't take this anymore. Or no, we're almost there. Hold on, right? Because what we don't want to do is for divorce fatigue to kick in and you give up things that you're entitled to just because you don't want to fight anymore. And the third one is freeze, right? Sometimes we can't even make that initial step to make that phone call, to have the courage to have that conversation because we feel frozen and there's so many unknowns. So having a CDFA in your corner is very helpful to make sure that we can be your eyes and your ears. Because when you're going through divorce, oftentimes it is you're very much trying to just get through the day, right? You're not thinking long term, you're in survival mode. And CDFAs have the ability to zoom out and really look at how the decisions you're making today will impact your future 5 years, 10 years, 20 years down the line. And you're not thinking about that. You can't. You're sort of like divorce brain and tunnel vision. So by having a CDFA, it's very helpful to be able for someone to look at it through a different perspective that has your best interest at heart and really looking out for the long-term financial impact of the decisions that you're making. And CDFAs are happy to work alongside attorneys, mediators, therapists, divorce coaches, accountants. We really appreciate that team approach, and we all stay in our own lane, and then you have multiple professionals who are supporting you through this process. So I like to think of the CDFA as the financial clarity partner on your divorce team and really help make sense of the settlement options that you have so that you don't have divorce remorse moving forward. And I'm happy to answer any questions if there are any questions specific to the financial aspect of divorce.
So we do have someone monitoring the Facebook page, but I'm not sure that we're seeing live questions right now coming in, but we'll leave some time at the end, hopefully, where as questions are rolling in, the appropriate professionals can jump in. But Melissa, thank you so much. I feel so lucky. And for our viewers, you are so lucky because I know, and Melissa didn't get a chance to say it, that she's about to launch a book that she has authored. It's called Divorce by Design, and it goes in greater deep dive about why it's so important to build the team to support you through the very important and impactful life event of a divorce. And so we just got a little introductory summary to some really amazing information that I'm sure is going to be fleshed out even more in that book. So I can't wait to get my hands on that copy. And you just gave so many great tips and information, Melissa. I know that I get this all the time when I suggest our law firm clients build a team of professionals to support them through this process, that the first knee-jerk reaction isn't that going to multiply the cost? So I just want to say, from the lawyer's perspective, no, it puts the work on the shoulders of the professionals who are qualified and expert to do it. So I'll just give a little analogy. When I started my law firm, I tried to be everybody's local lawyer. So if people came in with a real estate deal or an estate or will situation or a commercial contract and a family law matter, I was trying to do it all, and I sucked at everything because I was expert at nothing. And so I made myself expert in only family and matrimonial law, and that is my lane, and that is my area of knowledge base expertise. And even when friends ask me, will you handle my real estate closing? I'm like, I don't know the first thing about a real estate closing. So it just makes so much more sense to build that team. And trust me, your divorce will be more efficient. You will have the support that you need in the areas that you need it when you need it. And you will save your legal fees. And I'm going to go out on a limb and say, often your legal professional is the highest hourly rate and the most expensive for you. And so
Yeah.
put the work on the shoulders of the people who are equipped to do it and will give you the proper guidance and advice in an efficient and expedient way. And it will overall save you a lot of money, and a lot of stress and anxiety will be relieved from you. And that's invaluable, actually, as you're going through divorce, having had my own divorce story, which I won't share with everybody tonight. But anyway, thank you so much, Melissa.
Thank
And
you.
yeah, I know you're going to stay on with us. So if there's questions, we'll get them answered. Or if people feel more comfortable sharing their contact information in a private chat through the event, we can have the professionals connect with you by email and answer questions in that way. And you don't have to feel like you're going public with your particular questions while you're live on the event as a viewer. All right. I hope you'll stay with us, Melissa. And I'm going to now kind of do a more formal introduction of myself and go into my topic. So tonight I'm going to be talking about your options for how you approach the legal aspects and practical aspects of getting the legal divorce started and finished. So once again, I'm Deborah Whitson, and I'm a founder of Whitson Law Firm, who now has 5 office locations serving the entire Albany Capital District all the way up to New York's northeast border with Quebec. So we have 8 or 9 counties that we serve clients in that general area of central and northeastern New York State. I myself have been a licensed and practicing New York attorney for 31 and a half years now. I'm also a trained mediator, and I am honored to have done advanced mediation training in high conflict mediation situations with one of our other presenters tonight, Bill Eddy, who you'll be hearing from later. And I started Mediated Online Solutions as an online platform for accessing all manner of family law related mediation services. And Mediated Online Solutions serves clients all over the United States in mediation only. So the law firm is New York based, but the mediation company spreads far and wide. I'm also trained as a collaborative attorney. So I'm going to talk to you tonight about the various options you have for approaching your divorce. And I have a little bit of a PowerPoint presentation, but I just want to, as a way of background, explain that I think a lot of people think that the courthouse is the place you start and end your divorce legal journey. And I'm here to open your eyes, if you haven't already known about some of these modalities, and tell you that there are other and probably far better ways, in my opinion, to approach your divorce without starting legal warfare as the very first thing that you do. So I'm going to share my screen and start my presentation so you can follow along. And I promise you, I will not be reading slides. There we go. All right. I hope you're all seeing kitchen table to courthouse as the first page of my presentation. So the way I'm going to approach this tonight is to walk you through your options. And there are 4 basic modalities for how you approach your divorce action. And I'm going to lay them out for you in order of starting with first the options that have the least outside professional involvement, have the most control, and the lowest cost and lowest risk to the parties. So before we go further into that, I just want to also explain that in addition to being a trained mediator and a trained collaborative divorce attorney, I'm also a certified divorce specialist. That's that one achieves by undertaking specialized training with the National Association of Divorce Professionals. So let me just start first about why I founded Whitson Law, and I promise I will be brief about this. So when I was 14, I had a very impactful and tragic event in my life. My brother's best friend was murdered in a very gruesome way, and the criminal prosecution of that individual who was arrested and charged with the crime was very public in my community, and it rocked my family personally because it was someone close to my brother who was killed. Also rocked our school and our small town where I was raised. And so I decided at that point, as I was following that case, and I learned that there was a possibility that the perpetrator might walk free because of a legal technicality, a mistake that the police had made in the handling of how they arrested him and came upon evidence about the crime. I thought the system was broken because no one had, at 14 years of age, I hadn't been taught constitutional law. So I know, now later in life that I know that there were protections in our system for the accused criminals that are an important foundation of our just system of justice. But then I thought the system was broken. And so I determined at 14 that I was going to be a lawyer, and specifically I was going to be a prosecutor. And I indeed did that. And the first 10 or 11 years of my 31-year career was spent as a criminal prosecutor, and I specialized in special victims prosecutions. When I decided to leave public service and go into the private sector, I thought family law was the most analogous or similar to what I had been doing. Bear in mind, as a prosecutor, I spent a lot of time in court with hearings and trials, jury trials, non-jury trials, and I was very comfortable in that arena. And in the family law side of things, I felt very quickly that court battles were terrible for people going through separations or divorces, especially if children were involved. It just seemed to make no sense to me that people would let a stranger in a black robe make important decisions about their children, for goodness sakes. That seems crazy to me. But also just their finances and their future and their stability. And to be beholden to a statutory scheme in New York that gives the jurist wearing the black robe a lot of discretion in how they handle things with your finances and your kids and your whole future life coming on the outside of a divorce once you are actually legally divorced. And that's when I learned about mediation, and then eventually learned about collaborative divorce. And I thought, well, that just makes so much more sense to me. So I founded Whitson Law to make sure that I could offer all of the options that I had learned about and try to steer clients whenever it is possible from starting in the courthouse, and more importantly, from fighting in the courthouse. I mean, legally fighting, not physically fighting, of course, but avoiding the litigation, which is time consuming. It drags your divorce out longer. So that period of time that you are feeling divorce fatigue because of fight, flight, or freeze, that Melissa so aptly described, is a very common way to have gone through the divorce experience. And I think I felt all of those things at some point. And I was a non-lawyer, by the way, when I got divorced. But I really think that it's so harmful to people to go through that fight. And it just makes the process and the experience of divorcing all that more unpleasant, uncomfortable, and for many people, very, very, very much more expensive than approaching your divorce in some of the other ways that I'm going to now lay out for you. I guess this slide in a nutshell tells you that I have lots of experience litigating. That was prosecution was all about litigating. I have done my fair share of litigating also in family court and divorce court, but I choose mediation, and I founded my firm with the idea that we're going to bring supports through advanced training of our internal staff and offering other options to our clients aside from litigation, and by building partnerships strategically with the individuals that you are hearing from tonight and others, so that we can steer our clients to the people who can best support them on the specific issues that they are facing in their divorce. We are the legal experts, but we are not the financial experts or the co-parenting experts, etc. So I've already said that this is general information only. It's not legal advice. And with respect to matters of law that I may touch upon tonight, please know that I'm only licensed to practice in New York, and I only know New York law concerning family and matrimonial matters. I don't know intimately the laws of any other jurisdiction. So anything I say about the legal standard in New York, if that should come up, or I'm answering a question, please know that if you are not in New York State, you should not rely on my recitation of a legal standard as having applicability to you in another state or even another country if you're watching us from Canada or anywhere else. So I mentioned that there's this, sort of path of options available to you. So I'm going to start with the low touch, low outside resource, low cost option. And that is what I like to call the kitchen table option. Some people when they're approaching divorce are level-headed and amicable enough, even though they're deciding to divorce, to sit at the kitchen table proverbially. They're not necessarily always having these communications or conversations around the kitchen table, but you get the idea that they can talk through things. So if they have children, they can talk about what they envision for the division of parenting time between the parental households when they're no longer living together. They can talk about what to do with the marital residence if they own it, what will happen to that when they are no longer married, and so on and so forth. They can talk about how to support the children financially across two homes, talk about what to do with their retirements, their cars, their credit card debts, their mortgage loans, etc. Now, maybe they don't have the legal knowledge if they're not legally trained to know what some options are, or how the court might view those things. So, but if they can talk through those things and at least reach a tentative agreement on many of the major issues and lay that groundwork, they may be able to then engage lawyers to just negotiate fine-tuned details and draft a marital separation and settlement agreement for them. So again, they're going to use outside professionals, at least for the drafting of an agreement. They may consult outside professionals for financial planning advice, for tax advice, which is an important professional to have in your corner if you're going through a divorce, and to even get co-parenting guidance and assistance, etc. So, but if they've laid the groundwork and they have a pretty good understanding of the big picture of how they want things to look when they are no longer married and no longer cohabitating, they can save a lot of money and really use the experts for just putting their conceptual idea into a cohesive marital agreement. Now, once you have resolved all of the issues arising out of your marriage, meaning kids, support, division of assets, division of debts. Once you've resolved all that and you have it in a formal writing that's signed by both parties and notarized, that's your precursor, so to speak, to a truly easy, uncontested divorce, which is going to be a digital filing. It's a lot of paperwork and there's some lawyering that goes involved in that, but that's your path to a truly uncontested divorce. So I'll just detour for a second and say a lot of people think that if they agree they don't want to be married anymore and they want a divorce, that the divorce is uncontested. The grounds for divorce are uncontested perhaps, but you can't have an uncontested divorce unless you have taken off of the judge's plate all of the decisions that need to be made in a divorce. So that's where the marital separation and settlement agreement comes in, and it's a necessary piece of a truly uncontested divorce. So I know that you're probably thinking, you know, if people got along so well that they could figure this out around the kitchen table, then why are they getting divorced? So I can tell you that those people exist, but they probably are in the minority. So if you want to avoid the expense and uncertainty of litigation, you have other options if you can't figure it out on your own. Maybe your communication isn't great. Maybe you don't have all the information you need. Maybe, you know, in many marriages, one party may have handled most or all of the finances, and the other party may be largely in the dark about that and may not feel like they have enough information to just have casual conversations around the table about important financial decisions. So mediation can provide a structure and a professional who will guide and facilitate the parties through a safe, respectful, productive process that's structured in a way that the parties have all the information they need. There can be formal sharing of financial or other information, and you have a neutral facilitator. So not all mediators are attorneys, but when you have an attorney who knows family and matrimonial law acting as your neutral facilitator, that attorney can explain how child support works in New York, how alimony or spousal maintenance works in New York, what a court does with real estate or pension assets, or, you know, provide at least information about the general legal structure in New York that would govern these kinds of important decisions. But they will also tell you that you don't have to follow New York law as long as you have somebody properly draft your agreement. So, but for many people, knowing what is likely or possible if a judge is given the decision to be made for the parties instead of the parties keeping control of the decision or outcome themselves decide, I don't want the judge to make that decision, and that can encourage them to stay in the mediation process and get creative and figure out ways that are satisfying to both parties, where both parties feel like they get enough of what's important to them, but they're able to compromise on the things that are less important to them. And then the outcome of a successful mediation, again, is the drafting of a comprehensive and legally binding marital separation and agreement, and then you can go the next step to the uncontested divorce. Now, again, there's just some couples where that isn't enough, that their situation is complex, maybe their situation is more tense, maybe they've had a history of interrelationship violence or things like that, and they need a more safe and even more structured process than a mediation setting. So collaborative divorce, I think, is a brilliant model. The parties each hire a collaboratively trained attorney, and then they assemble the team of professionals that Melissa was referring to. So this works really well for people with complicated financial situations. Maybe they have businesses or assets that they acquired before the marriage, and now that's become kind of commingled with marital assets. Maybe they have a closely held family business or a professional practice that only one of the spouses is involved in. And so, I see collaborative divorce being really, really helpful when they have special needs children and they're navigating how to co-parent between two households or contemplating co-parenting between two households with a child who may have greater challenges adapting to going back and forth between each parent's household on a schedule than children who don't have those disabilities may have. So they assemble a team that could include a divorce coach, a co-parenting coach, or a child developmental specialist. They might have these financial planners or business evaluators, professional business evaluators to help come up with value on a closely held business or professional practice. And any manner of professionals that would support them. Tax professionals are very common to bring in the collaborative process at the appropriate time. And so that, again, they have the information, the professional guidance and support that they need for their unique situation. But in collaboration, everybody, all of the collaborative professionals who make up the team with the parties and the parties themselves commit to sticking it out to reach consensus and reach agreement, and they are not permitted to threaten litigation. So they can exit collaboration and begin litigation, but they can't use the threat of litigation as a tool, coercive, hammer, so to speak, in the collaborative process. So the spirit is truly, let's roll up our sleeves as a team and help these people figure it out and get them over the finish line so they can avoid the courthouse, except for the uncontested divorce filing. So that's hopefully now is you have a good understanding that contested divorce is when the parties make all of their decisions for themselves. So the question is, do they do it at the kitchen table, in mediation, in collaboration, or do they hire lawyers who can be problem-solving negotiators? So at Whitson Law Firm, even though people might not choose kitchen table mediation or collaboration, our default approach whenever we can do it is to settle cases early and often. So to work with our clients and their supporting professionals right from the beginning to really start to get a framework of where the client wants to go and what the likely outcomes are, and start to formulate proposals from the very first day. So we have a map of where the client wants to go. And we know where the client wants to go, so we can help them make the map how to get there. And we encourage the attorney across the aisle to come to negotiation, come into the negotiation process early as well. And we try to minimize the things that draw the clients into the courthouse over contested matters. So we truly try to live our values at Whitson Law Firm, that letting litigation drain the parties' emotional resources and financial resources and put their outcomes into an uncertain place because you're letting a jurist make decisions for you, should be the very last option for everybody who is going through a divorce. Or if you're not married and you have children and you're breaking up, we apply the same approach to parties who are just handling child support and custody, for instance. So that's a overview of the options available for you. I'm going to skip some slides because I talked through them, and but the slides will all be made available to the people who pre-registered or anybody who reaches out after the fact watching the replays. We're happy to share them. So I think I've already done a good comparison, and with that, I think I've communicated the main things that I wanted to relay tonight. And if there are questions that have been coming in live and I can address them right now, great. Otherwise, we'll hold them till the end and try to address questions that way. All right. I'm not getting any indication right now that there's questions, so we're going to move to our next speaker presenter, and that is David Consigli. And David is a CPA, so he's got accounting background and an ABV and a CDFA. I'll let him explain that alphabet soup to you. He's a partner in FAS Forensics. So the name suggests that they also provide forensic accounting and financial related business valuation type services to people, and not exclusively in divorce, but there's a applicability, of course, in the divorce setting. He specializes personally and professionally in the valuation of closely held businesses, business ownership interests, and intangible assets. I thought I still have a lot of years to go in my career. David is ahead of me. He's got 38 years of business valuation experience and advisory and succession planning and tax planning experience. He brings a lot of skill and knowledge to divorcing parties who have issues that fall under his purview. He may want to share more about his training and background, but I will turn it over to him because he's got some really good insights for people in his area of expertise during his presentation tonight. So with that, I'll turn it over to you, David.
Excellent. Thanks, Deborah. Just one thing that you mentioned, collaborative law. I'm also collaboratively trained. I've been involved in a number of collaborative cases. Some go really well, and when people don't understand it, some maybe not so well. But that's divorce. Our firm, FAS Forensic, we're a boutique forensic and valuation firm. We don't do traditional accounting. We just do forensic and business valuation. Our main office is in Saratoga Springs, and we also have an office in Boston. I sit in the Boston office, and I'm going to share my screen, and we can talk about, if I do this right. Actually, I'm going to pull this one over. Give me 1 second. I don't work in our IT department, that's for sure. So what I want to do is I'm going to kind of go through some of the same things that Melissa went through, only I'm going to try to kind of look at it more from like a forensic valuation type of analysis. Again, some of it will be a little bit repeated, but we're going to dive into it a little bit more from what we're seeing in our firm, especially in the litigation scenarios where I want to look at what you own, what you owe, what is income, if there's a business involved, and then some financial mistakes that we see that people make while they're going through a divorce. So the first thing we want to look at is asset division. So there's two components, right? There's the division of assets from a financial standpoint, and there's the determination of income in order to calculate child support and alimony. When you're looking at your assets, on a fair market value standpoint, right? So, when you're looking at the house, you're looking at what is the house worth, what's it appraised at, what is the, what are your investment accounts appraised at. And one of the difficult things, and Melissa mentioned this a little bit about fighting over the couch, like how deep do you dive in? How deep do you dive in and listing all the assets in the house, right? Sometimes we're in the marital estate, and sometimes we have to like talk to the clients about, is this really worth it? But my experience has been, and I do a lot of divorce work, is it's amazing what people are going to fight over. And you really have to, from a professional standpoint, really it's kind of a fine line to what's important to them, and asking them what is important. What is really what's the emotional part of the asset, and how are we going to get around this? Talk a little bit about liabilities, joint debt, credit cards, why it's important to close them. When you're looking at having joint liabilities, the danger really is if there's a credit card that's joint and someone doesn't pay it in 30 days, well, your credit is going to be hurt. And that can affect how you plan going forward. So it's really important to look at, what you have for debt. I think Melissa had mentioned that sometimes some people don't even know what they have for debt. Well, how do you find out? Right? You may want to look at credit reports. Reports don't list all your debt. They may list any debt that's outstanding, but you may have lines of credit that you may want to look at. You want to look at we'll look at bank activity, right? Do we see payments being made to a credit card that's not listed, or a debt that's not listed, and looking at bank statements. You're going to hear me talk about bank statements all the time. We want to look at IRS liens. Are there any tax liens, with the IRS? This may come into play if there's a business involved, where one spouse is involved in the business, one may not be. You also have to be careful about what has been personally guaranteed. I know, like when I first started my firm, I had a firm a while back, and when I went to apply for a line of credit, my wife had to sign for it. Well, if that happened, if I still had that firm and that happened 30 years ago, and my wife and I were getting divorced, she might not remember that she signed on that guarantee. And that line of credit will be, and that's important to be able to understand what you still owe in liabilities, and what has been personally guaranteed. When we talk about assets, oftentimes, it happens more often than I would like to believe, but oftentimes there are hidden assets. And this can get very complicated, especially if, we have a couple of engagements. I think we have two engagements going on right now where one of the parties has property, family, or is from another country. So sometimes those assets will get transferred over and they will try to hide them, you know. So how do we find hidden assets? One way, a really good way to look at indication of where assets are hidden are tax returns. And that's really where a CPA is really going to be able to help you out, or a forensic accountant. There's a Schedule B, which lists all interest and dividends. Now, there could be a $7 interest amount on Schedule B. That could mean it could be a $50,000 checking account that may have a small amount in a savings account that's not reported. So it doesn't really matter what the amount is. It's just the indication that there is another account. And there may be dividends on there that could indicate, like, could be $1 of dividends, but that $1 of dividends could indicate that there is an investment account that may have, thousands of dollars in it. So that's a good place to look on the tax returns for us on where we think that there might be money. Schedule D, capital gains and losses, again, will indicate that there may be investment accounts. So, if we're asking like where this came from, we need to see the investment account for this. That may discover hidden assets. Foreign account disclosures, FBAR Form 8938 may tell us about foreign accounts that may not show up on the financial statement. Other assets, we do this not a lot, but often, is when we're looking at assets is looking at a lifestyle analysis. What are they spending money on? What kind of assets do they have? Does their income support having those assets? Again, this happens a lot with business owners. Our business owners, especially the smaller the business, the more chance that the records may not be as accurate as we think they are. So we may do a lifestyle analysis, see what money is being spent out of a checking account or out of a bank account or out of a business, and to see where that money is going and what assets are they supporting. And that could be both for income and for hidden assets. And again, back to bank statements. Are there large cash withdrawals coming out of the bank statement? Are there transfers? They round numbers, right? We see $1,000 going out, and a lot of times it'll have like the account number that it goes to. Well, is that account number listed on the assets? So those are things we're gonna try to find out. Then there's income. And why is income important? Again, like I said before, income is important for child support and alimony, and being an accurate calculation of what that income is. Sometimes we think income, it's pretty simple. What's on their W-2, but are they getting any other benefits from their W-2? I'm going to do this backwards. I'm going to start with the individuals first. All the earned income includes overtimes, commission, bonuses, unearned income, interest, dividends, rental income, pension, Social Security, workers' comp. Each Deborah talked about New York law and state laws. Each state calculates, has different guidelines for like child support. So you have to know what those are and what's included. There's no double dipping generally. So if we're reporting income from dividends, has that asset or that, brokerage account or wherever it's coming from, has that already been divided as an asset? If it's already been divided as an asset, then it's not continuous income going forward, which is really called double dipping. I'll talk about double dipping a little later when we talk about businesses. If someone owns a business, the income that they take from the business may not necessarily be what their true income is. If there are personal expenses being paid through the business, those personal expenses are going to get added back and added to their income. Because in essence, it's like the company's giving them money and then they're going and paying their personal expenses. So we do a lot of that when we'll get hired just to calculate what someone's income is. And sometimes that can be a pretty extensive valuation. It can be a pretty extensive process just to incur what their expenses are. If they own a business and we're going to value the business as an asset, and then we're going to figure out what their income is. One of the things that we do, one of the discretionary expenses that we adjust when we're valuing a business is the owner's salary. And what we're going to do is we're going to use salary surveys. We're going to use government surveys. We're going to use a bunch of different salary surveys to see what is the fair market value of that business owner's salary. And if it gets adjusted to fair market value, because often business owners will take less or they'll take more, either way, what we'll do is when we adjust that to fair market value, then that fair market salary, if the business is being valued, will also be the amount that is determined for child support, because you can't not adjust one without the other. So that's very important. If it's a small business, let's say it's a sole proprietor or a plumber, electrician, someone that just files a Schedule C, we're going to look at the expenses that are reported on that Schedule C and maybe adjust them and add them back for one or two reasons. Number one, that because it's really the net income that's really what they're making, not their gross income, because you have to take out their expenses. But you really want to take out the expenses that are incurred to generate that income. So, if they have a $10,000 net income, but yet they had a $20,000 legal bill that they're never going to have again, then we're going to add that $20,000 back, because we're kind of really forecasting what their future income is going to be going forward. So that would be a non-recurring expenses. So we're going to look at any non-recurring expenses that might get added back to their income to use for support. The other one is discretionary expenses. We're going to look at discretionary expenses. Discretionary expenses are expenses that, you know, I have an accounting practice. I deduct my automobile, as a business expense, but I don't really need my automobile because I sit at my desk all day long. So that may be a discretionary expense. If it's a business, sometimes the business owns the property and the property pays rent, but the property is in a different LLC or S corp or a different entity. The discretionary expense is the rent. So we want to adjust the rent to fair market value. So that may be an adjustment to income. Now, this is really what I do probably 80%, 85% of my time at Fast Forensics. We do income analysis. We do help people split assets. I do some collaborative law, but the majority of my time is value in businesses. And over 50% of the business valuations we do are in the context of divorce. Businesses are marital assets and they need to be split. Now, that doesn't mean that, one spouse gets 50% and the other spouse gets 50%. What gets split is the value. I had an accounting client once that told me he wasn't getting along with his wife, and he said, I might be going down the road of divorce. And I said, well, you're going to have to get your business valued. And he said, well, no, I'm not doing that. She can have it if she wants. She can't run it. And I'm like, it doesn't work that way. It's the value of the business that gets split. There are three. First, I want to talk about standards of value. Standards of value is what is the law that determines, or the rules that determine, how the business is valued. Standards of value are state specific. So in divorce in Massachusetts, the majority of the time, because it's not set in stone, the majority of the time the standard of value is fair value, which is equitable distribution. It's defined as equitable distribution. In New York, it's fair market value, which is really an IRS term used for gift tax purposes. It's defined in Revenue Ruling 5960. I know I'm a CPA, but that might be the only revenue ruling I know. And it's defined as what would be paid in cash or cash equivalent from a willing buyer, a willing seller, with neither one under the compulsion to buy or sell, and both knowing all the relevant facts. So really what that's saying is, that is saying that somebody like myself, and I always use this example when I'm explaining it to clients. If I were to buy that business, what would I pay for it? I know nothing about the business. I'm strictly an investor. So when I look at that business, I'm going to say, based on the risk, then based on what I want for a rate of return, and the higher the risk of the company, the higher the rate of return, the lower the value. But after everything is paid for, what is left over for me that I could take as a distribution? So I'm going to make a few determinations on how I do that. There are three methods to value a business. There's a net asset method, an income method, and a market method. The net asset method is simply adjusting all those assets that the business owns to fair market value. Subtract the liabilities, and then what's left over, if it was a sale, and it's not necessarily a liquidation sale, it's a sale of normal times, like to sell that asset, what would be left over for me? And that would be the value of the net asset method. A good example of a business that would use a net asset method would be like an entity that owns like a commercial piece of property. That's like our office building gets rented out, or residential property that gets rented out that's held within an LLC. There's really not a lot of goodwill. There's really not, the value of the business doesn't come from the employees. It basically comes from the asset. So if that asset is sold and then the mortgage is paid off, what's left over, that's the value of the asset. Now, some people get confused, including, I will say, including people in my own industry, that I go up against, is that if there's a non-controlling interest, like less than 50% ownership, then this method is not appropriate, because as a 49% shareholder or a 10% shareholder, I can't go in, and I don't have the voting power to sell the asset. Think about publicly traded companies. You can't walk into Google and say, hey, I want to sell that desk, and give me my, 0.5% for that. So it cannot be appropriate in those situations. So we have to consider all three methods too. The next one I'm going to talk about is the market method. The market method is when there's a transaction. Maybe we have databases that we look at that show us like dentists throughout the whole country and what their practice sold for. And what their practice sold for, what was their revenue, what was their earnings before interest, taxes, depreciation, and amortization, which is basically cash flow, and what were those multiples of that sale. And then you apply that to the subject company or the company you're valuing. That's the transaction method. Also, we would look at current transactions within that company. Now, that doesn't happen often with smaller companies, but it may happen with startup companies that are raising capital or raising money, selling preferred stock or things like that. Well, we can look at those transactions and see what was paid for it and then make some adjustments and allocate it to whatever the ownership interest is of that person. The other one is the guideline company method. And the guideline company method is when there are publicly traded companies that are comparable to the subject company. So publicly traded companies are listed, their value is listed every single day. So again, we would look at certain multiples, revenue multiples, EBITDA multiples, price to earnings multiples, and then apply them to the subject company. A lot of times the market method is used for us, especially the transaction method, as a sanity check, because a lot of times you don't know, what was behind those sales. And every now and then we do have, especially again with startup companies, we've had some guideline companies we use. The majority of the valuations we do, we use the income method. And remember I said, if I'm an investor, what can I say is left over for me after everything is paid off? We take that and then determine what a rate of return would be based on risk. And when you take the income or the cash that's left over divided by the rate of return, that gives you your value. That's also pre-discounted. So if it's fair market value, then we're going to apply discounts. Discounts for lack of marketability, meaning I can't just pick up the phone and sell my ownership share, and then discounts for, non-controlling interest or what have you, key man discounts. And that would be if it's a fair market value, standard of value. If it's fair value, discounts aren't applied because it's equitable distribution. So, excuse me, what we're going to do to arrive at that income is we're going to make what we call normalization adjustments, which I've kind of mentioned a little bit before, where it's, gap adjustments, if there are any accounting errors. I talked about discretionary expenses and non-recurring expenses. We're going to add them back. And I just want to finish up with some of the things that we've seen. I pulled this from an old article that I wrote, financial mistakes made in divorce. One of them is not educating themselves in their finances. We all know oftentimes one spouse handles all the financing. So if the spouse is the one that doesn't handle the finances, you got to get yourself educated. And, that's where you hire someone like Melissa or myself to come in and help you out, right? Because especially on the asset splits, because asset splits are usually final, where income, can be modification, but all you're talking about is additional fees. And I think Deborah mentioned too, and what we say to clients too, not only are we probably have less of an hourly rate, but we usually can do it faster than the attorneys too. So it's very important to get, financially educated, both the attorneys and the client. I think it's important. Treating all the assets the same. A 50-50 split isn't always a 50-50 split. Some assets have tax consequences, other assets don't. So if you're taking a retirement plan and someone's taking a primary residence and that's the asset split, but there's going to be a capital gains exclusion on the residence at some level, then those two things aren't equal. You have to take into consideration the taxes. That's really important. The other thing too is on the deduction of alimony on the federal level has never Well, I'll get to that later. Not updating your financial documents, and that's really your balance sheet, and not knowing, what you have for assets, and keeping those things in line and on, um, up to date, so that you're constantly looking at the most updated thing. Not accurately accounting expenses and lifestyle. I see financial statements all the time where it's all round numbers on what they pay for expenses. And, I can see back in the day that might have been difficult, but in today's day, you can log on to your online checking account, you can export it to Excel, and you can sort it, or you can have somebody do that for you and really get a good, accurate picture of what you're spending money on, because lifestyle is important. I talked earlier about not getting rid of joint debt, which can hurt your credit if it's not paid. Not having major assets appraised, businesses. If your spouse owns a business, or if you own a business, it's in your best interest to get it valued. It's expensive, depending on the size of the business. But I see all the time where people say, "Oh, we just went with what they had. We didn't want to spend the $10,000 or whatever it cost." So, you mean to tell me that you got a business that does $2 million, and you don't know whether you're going to be $10,000 off or not. It's not worth it. Not searching for hidden assets, ignoring credit, not using professionals. Like we said numerous times, that it really saves you money. And I think the other thing is post-divorce planning. Talking to your financial advisor on what needs to be done post-divorce. You're talking about beneficiaries to, retirement accounts, life insurance, updating your life insurance. If you have a trust, updating that trust, updating all the legal documents, your healthcare proxy, especially if you have kids, wills and trusts and things like that. I think that's something that people always say they're going to get to, but they never do it, and sometimes it's too late. So I know I'm out of time. That's why I'm talking really fast now, and I think I went a little bit over, but I hope that was informative.
David, thank you so much. It was so informative, and especially, the key nuggets that you gave us. And I hear all the time about, I don't want to spend money to have a marital business valued. And they'll say, well, my husband said that the contractor in the next town over will give me X dollars from a contracting
Yeah.
company if I was to sell it today. And I'm like, no, we're not going with that. That's not a reliable indicator of value. So,
One
so
thing
much.
that we do, just one other thing, one thing that we do often, I offer this to anybody, is sometimes people don't know, is my business a job or does it have value? And we do a preliminary look at it for you. Like, we'll take a look at tax returns for attorneys all the time and say, yeah, it's really a job. You know
Mhm.
what I mean? It's not, or we'll say, yeah, there is value there. And it's value. Sometimes something, well, if I left, then the business isn't worth anything.
Mhm.
It's a concept of called value to the holder. It's what it's worth to the owner, not necessarily whether it can be sold or not.
Great point. So we do have one question, but before I pose that on behalf of the questioner, I do want to encourage everybody. I know that we advertise this for a 1 hour block, but there's two great presentations coming up with more value, different topics. You're going to be hearing from Bill Eddy from the High Conflict Institute and Maria Natapov from Synergistic Step Parenting, who is also a co-parenting coach and trainer. So don't leave. And if you have to leave, know that this is recorded. So if you have a hard stop and you can't stay with us, make sure that you connect with us, and we'll get you the recording so you can watch it. But David, there was a question from one of our viewers on the live stream, and that is, what if my husband owns a company and pays me a salary, but it's paid into our joint account?
As far as like I think it depends, is that if we're talking about income, we're talking about support or alimony, is that can number one, is going to continue to happen, right? Because if it doesn't,
Mhm.
then it's not going to be included in any support amounts. It's going to be added back. As far as a business, if we're valuing the business and you're not doing a job, or you may be doing a job, but the job really doesn't need to be done, then it gets added back and gets added to the value of the business.
Right. Or if you're getting paid a salary because it's a family business that's out of line with the responsibilities of the position, right? So
Right,
if
right.
the position would pay 20,000, but you're getting paid 50,
Yeah, it would always get adjusted to fair market value. And if you're doing a job, say like you're the bookkeeper and you're not going to continue to be the bookkeeper, but they need a bookkeeper, then it's not going to get adjusted for valuation purposes. I mean, it'll get adjusted to fair market value, but then it would get adjusted for support purposes.
Thank you. Okay, I think that's all we have for the submitted questions from the live side of things. If you don't mind stopping your screen share for us, I'm going to now move on to introducing Bill Eddy so he can jump into his portion of the presentation. I think we're seeing your
Um,
or is that Bill's screen that we're seeing? No, it's not Bill's.
oh, sorry. How do I? Oh, I got it. Sorry.
Yeah, just stop share. There you go.
I
Perfect.
couldn't. I have three screens, so I couldn't find the stop share button. Thank you.
It's the multiple screen dilemma. Okay. Thanks again, David. And Bill Eddy, welcome. We're so pleased to have you here for our viewers. Bill Eddy is a licensed certified social worker and attorney and the co-founder and chief innovation officer of the High Conflict Institute. While pioneering high conflict personality theory, he was the national conflict. Maybe I'm not getting all this right. Bill, I'm going to let you take over the rest of the introduction because I think my print it cut it off. So I'm sorry about that. I thought it was all complete, but I know you have some great information to share. And as I mentioned earlier, I have taken trainings from Bill through the High Conflict Institute so I could work with mediation when there are high conflict individuals involved. And how many of our viewers think that they are divorcing or about to divorce a narcissist, and it doesn't get much more high conflict than that. So you're going to want to hang it out and listen in on Bill's presentation because he's got some fascinating things to share.
Thanks so much, Deborah, and good to see you again.
Likewise.
Okay, well, let me jump into my presentation and start with I'm going to share some slides, and let's see if I can turn this into a slideshow. Here we go. So yeah, just briefly with the High Conflict Institute, generally we figure about 10% of adults have a high conflict personality. That means that they're preoccupied with blaming others, have a lot of all or nothing thinking, are often show unmanaged emotions and may engage in extreme behaviors like hiding money, spreading false rumors on the internet, domestic violence, etc. So what we do is we train professionals to work well with people going through high conflict divorce, workplace bullying, neighbor disputes, etc. And part of my job, I'm the director of innovation, is coming up with simple methods to deal with, like the BIF method. And BIF stands for brief, informative, friendly, and firm. It's designed for emails, text. You can even use this approach with verbal conversations. And so that's a lot of what I do. And I'm a lawyer. I was a mediator with the National Conflict Resolution Center based in San Diego for 15 years, family lawyer for 15 years, and a family therapist for 12 years. So some of that overlapped, but it's interesting because I come at this from 3 different professions, and that's where I came up with a lot of the high conflict methods. So without further ado, let's talk about the BIF method. We called it the BIF response. So when you get a high conflict email, text, nasty, communications, that it's a way to respond that keeps it brief, informative, friendly, and firm, and calms the conflict and often ends the subject. But it can also be used to initiate communication. So I'm going to talk about a couple examples. But first, let me just mention that the brief is really hard to do, but good to do. And you get used to this with more practice. And let me just mention at this point, sometimes people put in ChatGPT or one of the other AI programs, write me a BIF response to this horrible email I just got. And I want to tell you why I recommend against doing that, because I want you to learn the method so you can automatically and quickly do it yourself. You actually save time by learning this method. So it's brief. Typically, like, let's say you get a 2-page email, and typically just a paragraph, 3, 4, 5 sentences is sufficient and doesn't leave too much there for the other person to pick on. So when you're responding, keep it brief. Second is just straight information. It's not arguments, opinions, emotions, defenses, explanation. You don't want to do that. You want to just simple information. So it's brief and informative. Third is friendly. So if you can, start with a friendly greeting, like, thanks for telling me your concerns. So even if someone sends you a hostile email or text, you can respond in a friendly way. You can choose to do that, to shift the conversation. And sometimes you want to wait a few hours before you respond to something. And that really can help calm it down and have you be careful to do a BIF response. Because when you use BIF responses, it tends to calm both of you. And it doesn't take much time. That's the thing I want to emphasize. So a friendly greeting, maybe at the end you wish them well or enjoy the concert or whatever it is that you're discussing, typically parenting matters. And then firm. Firm doesn't mean harsh. It means you end the hostile conversation. So a good BIF just ends the conversation and often doesn't get a response because you don't really need a response. But sometimes you do need a response. So it's okay to ask a question and to say, please let me know yes or no by Thursday at 5 o'clock, something like that. So the idea is it's brief, it's straight information, has a friendly tone, doesn't have to be super friendly, just a little bit friendliness, and firm. Now, we have a book, and I'll show a slide at the end about this, called BIF for Co-Parent Communication. And I want to read you an example from it and see if you think it's brief, informative, friendly, and firm. And so first, I'm going to just read an incoming email. So this is Katie, and Katie sends an email to Ben, and this is about birthday parties. And if you're early in the divorce process, this is one of those things that catches people by surprise, like, oh, what do we do? So this is an example and how you can communicate around this. So Katie starts out an email to Ben. Allison, their daughter, has a birthday party at Ella's house on Saturday at 10 a.m. during your time. She needs to be there on time with a present, and you should buy her an outfit from Nordstrom. Allison has something in mind for herself and wants to go to Nordstrom's. Make sure she wears her new jeans and that she eats breakfast before she goes and eats all that cake. So I'm not going to ask you about that. I'm going to ask you about this response. So here's Ben's response. You can't tell me what to do during my parenting time. I have plans with the kids on Saturday, and I'm not running all over town and wasting half the day in the car. You can't tell me what to feed my kids or how they dress anymore. I'm in charge. Mind your own business. So let's look at that. Would you say that that's brief? Let's see, that's 1, 2, 3, that's 4, that's 5 sentences. Yeah, it's probably brief. It's typical paragraph. Is that informative? Just straight information, not arguments, opinions, emotions, defending yourself. No, that's got a lot of negative stuff in there that's not straight information. He's talking about you can't tell me what to do. He does say I have plans with the kids on Saturday, so that's useful information. I'm not running all over town. That's an argument. You can't tell me what to feed my kids. That's defensive, emotional, etc. Mind your own business. Okay. So that's not a BIF. But one of the problems with this is it invites a response. It doesn't settle the matter. And so it's nasty. So there's a good chance Katie's going to respond to what Ben has written. Let's see if hers is a Biff response. I want to keep you informed when the children have a function or activity that I am aware of. I will make sure any possible activities are on the shared online calendar, and I will forward any email invitations they receive that fall on your time so you can make decisions and respond. I respect your right to make decisions about your time with the children. Okay, so let's see. Is that brief? What's that? 1, 2, 3. Well, one of them's a little long, but that's only 3 sentences, and that's a paragraph, so that's brief. Is it straight information? She says, I want to keep you informed. Well, that's useful. About activities. See, this is soon after the separation, and she's been used to managing Allison's social calendar. So that's why she just thought, of course, he'll want to take her to this party because it's a friend of hers, and Mom knows about parties and stuff. So straight information. I'll forward any email they receive that fall in your time so you can make decisions. All right, that's nice, and that's useful knowledge. And I respect your right to make decisions. So that's also useful information. It's also friendly. Have a friendly greeting or close with a friendly comment. She says, I respect your right to make decisions. I want to keep you informed. That's how she starts. So that's friendly. So we've got a brief, informative, and friendly. Let's see if it ends the conversation. I'll forward any email they receive. I respect your right. So pretty much that settles it. It's like, I'm telling you about this, and I respect that you'll make your own decisions. So I would say that that's a Biff, and that's what we agreed in the Biff book. We got 28 examples, I think, of conversations like that. So Katie's response to Ben's response, Katie's was a Biff, Ben's was pretty hostile and angry and not a Biff. Now, I want to show you some more questions. So we've got these 4 questions to ask yourself. Altogether, we have 10 questions you can ask yourself. And we call it coaching questions because you can teach this to somebody else. And what we've learned is most people teach this to somebody else. Is it brief, informative, friendly, and firm? Does it contain any advice? No. Does it contain any admonishments? Well, Ben's did, because he said, you can't tell me what to feed my kids. Mind your own business. That's an admonishment. So that's not good. We don't want that in a Biff response. We want to just keep it really simple, just informative. Now, does it contain any apologies? And this may sound confusing. So apologies most of the time are a good thing, a great thing. But when you're responding to an angry person, especially if they're frequently angry, we find that they may use your response as ammunition against you. And so they may say, see, she responded with an apology. See, she admits it's all her fault. And that's the thing that you want to avoid, is assumptions that it's all your fault just because you said, I'm sorry. But some people see the world that way. It's all one person's fault or another. And so they're going to use that against you. So you'll notice in the one we just read, Katie didn't say, I'm sorry. What she said is what she's going to do. I want to keep you informed. I'll make sure activities are on the calendar. I'll forward email invitations, and I respect your right to make decisions. None of that included the word sorry. So if there's something that you're tempted to say sorry about and you're really uncomfortable with that, say what you're going to do in the future to save yourself exposure to the word I'm sorry. Now, what do you think how do you think the other person will respond? Well, if we had asked Ben that, then he might have said, well, I think she's not going to like that. She's going to respond, mind your own business. That triggers a response very often. So Ben might decide to take it out if he's looking at this before he sends it. And then is there anything you take out, add, or change? That's the kind of thing you would do. Would you like to hear my thoughts about it? So would you like to get someone else's thoughts? And that's these 10 questions. So let's look at another example. Hi, Maria. When I got Junior today, he had an ear infection and needed to be taken to the doctor. Doctor said it's obvious he got sick at your house over the weekend and you did nothing about it. He prescribed antibiotics, which you will need to make sure he takes twice a day in his ear. I am sending the bottle with him to school tomorrow, so make sure he has it in his backpack and when you pick him up. Once again, you have been all caps irresponsible about Junior's health, and I have to clean up after your irresponsibility. I will discuss this with my lawyer and decide whether to return to court to reduce your parenting time for the health and safety of our son. Signed, Carlos. So let's see Maria's proposed BIF response. Thank you for taking Junior to the doctor. I will follow the directions for his medication. I was not irresponsible with Junior, and he had no signs of an ear infection while with me. As you may know, those symptoms can come on very quickly. I am fairly sure the doctor did not tell you he obviously got this ear infection while with me. I will keep you advised of Junior's condition while he is with me. Is that brief? Yeah. Is that informative, straight information? Well, she says she'll follow the directions. They may have come on quickly, but then she's defensive. She's saying, I was not irresponsible. I'm fairly sure the doctor didn't say that. So she's already gone beyond straight information. So let's try a little bit of editing out. Let's take out a little bit of the complaints about irresponsible and that the doctor didn't tell you that. Let's see how this looks. Thank you for taking Junior to the doctor. I will follow the directions for his medication. Junior had no signs of an ear infection while with me. As you may know, those symptoms can come on very quickly. I'll keep you advised of Junior's condition while he is with me. So is that brief? Definitely. Informative? Yeah. Friendly? Thank you. I'll keep you advised. Yeah. Firm? It ends the conversation. There's no hooks for Carlos to respond to. Now, does it have any advice? No. Admonishment? No, but you might wonder about the phrase, as you may know. And that might be a little bit of an admonishment. It depends on the writer and the reader and the situation. Apologies? No. How do you think he'll respond? There's nothing really for him to respond to, so that's good. And then anything you take out, add, or change, maybe you take out as you may know. What we recommend is you read it with a phrase that you're not sure about and read it without that phrase, and then see which one you like better. And that's basically it. So we would say that's a BIF response. So this is the BIF book. I read both those examples from this book. This is easy to use. It's got 28 examples of common situations like school, schedule, gatekeeping, dance lessons, birthday parties, exchange and rescheduling, childcare, school teacher, illness, medical appointment, basically all the things that parents, co-parents write about gives you examples of what might work. And I recommend you learn the method. And then if you want to peek at AI, you can write your response and ask AI what they think. But what you want to do is train yourself to think in the BIF format And you can speak this way too. Just be brief, informative, friendly, and firm. This calms so many couples in their communication after they separate. And it also makes you look good. If you have to go to court and you're writing like this and the other person's sending you all hostile stuff, you're going to look pretty good. So that's my quick biff. Hopefully that was brief, informative, friendly, and firm, and I'm done.
Bill, thank you so much. That was very brief, friendly, informative, and firm. I got it backwards. Be brief, informative, friendly, and firm. And I have to say that to the audience, I gift the Biff for Co-Parents books to many, many, many of the clients that have children that are going through separation or divorce working with my law firm or my mediation company. I think it is gold. So it's just very good, solid, easy to follow advice. And if you just practice it a little bit, it becomes second nature and it changes the whole dynamic. I don't know if you said this to me, but like if you don't allow the fire to have oxygen, it will die out. So what I think the Biff method does is just take the oxygen out of the angry fire. Because if you just respond very straightforward, businesslike, friendly, and firm, and leave the commentary and jabbing back and forth out of it, and just stick to the facts, the fire will go out. And I think the co-parent who is inclined to be inflammatory will eventually find that it's not so fun if they're not getting the reaction they're trying to get, right? So thank you so much. It's always great to hear a refresher of your review of that method, and I can definitely tell people that it does work, and it's definitely worth getting a try and getting that book. Before I let you go, Bill, there was a question submitted about is it advisable to use a co-parenting app? And I have a lawyer's perspective on that, but I would love to hear your perspective for the audience member who asked that question.
It can be. The main thing is that it doesn't do the work for you, that you need to train your brain to think in these kinds of approaches so that the app doesn't do the communication for you. So things like our family wizard that just keeps what you've sent can be useful, but you want to do the thinking. That's what's so important, because it gets easier and easier. And plus the other person may start writing back in the same format when they see how good you get at it. So you could use those, but do the thinking for yourself.
That's great insight. So from a lawyer's perspective, we love co-parenting apps because it documents the conversations, has the number of times they were opened, read, or viewed, and usually creates court-ready exported PDFs for easy use of admitting those into evidence if that becomes the situation that your situation requires that we're in court, and letting the court see these communications, or letting your co-parenting coordinator, if you have one, in on those conversations. And you can have your co-parent coach or coordinator included on some of these apps, so they're seeing them in real time and can intervene and give advice if needed to de-escalate. But the one feature I like in particular about Our Family Wizard versus others is it has a tone monitor. So if you write FUCK in your response, it's going to pop up, do you really want to send this? It's hostile. So, and the fact that you go ahead and send it, the court and everyone else knows that you overrode the warning in order to send that message. So, so there's value in that. At least gives somebody that moment to think before they hit send. Do I really want to send this? And because it's in a co-parent app, it's very likely going to show up somewhere eventually in a court proceeding. So I like that feature. So, but that's just a lawyer's perspective. But your point about, don't let the app do the work for you. You have to still be thoughtful about what you are putting in your communications is a good point. So thank you. All right. So I know, again, we've gone way over time, but we do have one more really amazing presentation. This is coming from Maria Natapov, who is the founder and owner of Synergistic Step Parenting, born out of her own step parenting journey, where she learned along the way, but she's got a ton of credentials I don't want to get them wrong. She is a BH2O certified co-parenting coach. She has coach training certification from the Coach Training Alliance and International Coach Federations. Those are both recognized certification programs. She has parent coaching certification, rapid resolution therapy training and coaching training. And since she's a behavioral technician and just a delightful person. And she has an official co-partner relationship with Wits and Law where we steer our clients even on the initial intake process to a free consultation with Maria so that they can start out with a good foundation of knowing what's out there to support them through co-parenting or step-parenting. And some people are doing both. They're co-parenting and they're blending families with step-parents. So Maria can cover all of those kids going back and forth between two household parenting issues that often arise because it's been my experience from working with a lot of people that and being a step parent myself that co-parenting and step parenting is not necessarily an innate skill. It's a skill like any other skill that requires some expert guidance sometimes and some practice to get it just right. So Maria unfortunately had a conflict with this date and time slot that came up at the last minute and was unavoidable, but she was gracious enough to record her entire presentation for us, and I promise you it's brief. So I'm going to go ahead and share my screen and play her presentation for you, and then we'll come back for final questions and sending off and next steps for everybody after that plays. So let me get the share going. All right. And here we go.
Good evening. My name is Maria Nadapov, and I work with parents who are navigating high-stakes co-parenting, often during and post-divorce, often in the public eye, and always with something greater at stake than their own comfort. They come to me not because they're falling, but co-parenting post-divorce isn't. Next slide, please. The most overlooked problem in high conflict co-parenting isn't personality, it's infrastructure. Many families, especially the high performing ones and highly efficient ones, approach co-parenting like duct tape. They patch it up and hope that it holds. But co-parenting post-divorce isn't a leak to fix. It's a system to build. And without that structure, unfortunately, it's our child that becomes the battleground. You may have experienced it. Maybe you win a legal battle, but you notice your child is still walking on eggshells. or you hire the right support, and somehow everything still feels reactive. So next slide. Through the BH2O framework, together with parents, I solve this through architecture. It's a 3-part framework, as you see in front of you. The foundation is the why, which is your shared co-parenting purpose. Then the how, which is your system, which are your systems for communication. And finally, the what, which are your mutual boundaries. It's not emotional, it's structural. And that is exactly what protects your children. Next slide, please. So the BH2O system is named for a powerful element called beryllium, which is a strong, resilient metal that holds its shape even under heat. And the second part is a strong compound, which is H2O, which is commonly known as water, because water is fluid and adaptable, and it flows around obstacles. And we really find that successful co-parenting needs both the stability and adaptability. And this energy is exactly what I help parents model. The system itself is grounded in negotiation strategy from William Ury, business infrastructure from EOS by the Arbinger Institute, and neuroscience and trauma-informed work. But above all, it is child-centered design. I don't coach communication. Together with parents, I engineer systems. Let's take a look at what that looks like in practice. So the first step is starting with why. I help co-parents articulate their shared purpose beyond the divorce process. For example, something like to protect our child's peace. And this becomes their decision anchor. So if it doesn't serve this purpose, then it doesn't go into the plan. Secondly, we build the how. And we do that using the CLEAR communication protocol. Now, CLEAR is an acronym that stands for concise, listener ready, essential, appropriate, and relevant. Because less is more when tensions are high. We create a system where communication happens on neutral platforms at predictable intervals with clear lanes. The third piece is we define the what, which are, of course, as we said before, mutual boundaries. And boundaries really become policy. For example, no entry into each other's homes, 24-hour notice for scheduling changes, or something along the lines of not speaking about the other parent's choices or commenting on them in front of the children. They're clear, they're mutual, and they're enforceable. These are not rules. These are peace-protecting behaviors. Next slide, please. So many families I work with may already have supports in place, and that's really important. So you might have maybe a therapist, maybe an attorney, maybe a CDFA, or a parenting coordinator. And all of them are really important. They play a vital role, right? Therapists help to heal the past. An attorney protects your legal rights. GAL advocates for your child. A parenting coordinator resolves disputes. A CDFA structures your finances. These are all critical components, but none of them actually build the system that create the bridge that helps to make all the pieces work together. BH2O builds that system and holds the emotional, structural, and communication needs together. So you have a clear path forward. I don't fix people. Instead, together with parents, I fix what holds them to make everything work. Next slide, please. So the truth is that your child doesn't need you and your co-parent to get along. That is an optional choice. Sometimes it's available and other times it may not be. But what they need is to feel safe, stable, and free from fallout. And that doesn't just happen by chance. It really happens by design. Peace isn't something that you can go and buy or demand or schedule in court or outsource, but it can be engineered. And once the system is built, it runs. So imagine for a moment, it's a year from now, and your child says, it feels better now. You and mom or dad don't fight as much, and it feels calmer. That isn't a fantasy. It's a framework. BH2O was built for parents like you, leaders, protectors, and architects of legacy, who are ready to lead with stability, not just strength. So if something in this sparked something in you, you know where to find me. Thank you so much for letting me speak into something so personal and so powerful. Systems matter, and your child deserves one that holds.
Okay, I hope you enjoyed hearing from Maria Nadapov and about the importance of having a system and a structure when approaching co-parenting. And I think that there are some additional questions coming in, and I invite the other participants who are still in the meeting with us to turn their cameras on and be ready to answer one or two of those. And let's get started so we can wrap this up and get everybody on with their evening. All right, so there was a question, what if I'm co-parenting with my ex, but there is an order of protection against her? Okay, so this might be something that our co-parenting experts might weigh in on, but from the legal perspective, this is a really important question. So you must communicate within the bounds of what is set forth in the order of protection as to your ability to communicate back and forth. So if you are not the person who is the subject of the order of protection, meaning it's not being issued against you, you may not have restrictions on how you reach out to communicate with the co-parent, but how you reach out to communicate with your co-parent who is not permitted perhaps to communicate with you or has limited ways of communicating with you. You want to be sure to communicate in a way that is not intentionally inviting the other person to respond in a way that would be not permitted by the order of protection. But usually if a child is going back and forth, there is a carve out or some provision in the order of protection that tells the party against whom that order is issued what is allowed in terms of communication. We're not going to see kids going back and forth if the parents can't communicate at all. So but you need to understand what's in that order, understand if it's not imposed upon you, you're not the subject of the order of protection, what you should do. So I would say consult your attorney for clarity on that, but know that it's a really good thing to be thinking of because you don't want to run roughshod and unintentionally and violate or provoke a violation of the order of protection. That's my legal 2 cents. I see Bill wants to say something as well.
Yeah, I can add to that. Also, having had many cases with restraining orders in family court, you have to read the specific order because it will say in there what the person can and can't do. And you don't, if you're not the restrained person, you're not supposed to be putting them in a position to violate the order, like going up to them at an activity if they have to be, a certain distance away from you. So you can get in trouble for violating their order, doing things like that at a game or a school event, something like that, where it's clear you're pushing them to be in violation. But another thing is asking for what's needed for good communication. So, for example, some protective orders say that you can be within a certain distance for curbside pickup and exchange of the children. So you want to talk to your lawyer, or if you're representing yourself, you want to be specific to what works for your situation, because often judges will make the orders allowing, one activity but not another, such as a way of communicating by email, but you can't have face-to-face communication, such as that. So just get it specific.
Great advice. Good answer, Val. Thank you. There's a couple like that fall into the purview of our financial professionals here, so I'll throw these out. Should I open my own bank account before filing? Now, I get this a lot because some people don't have their own credit established or credit cards or their own bank account. Everything is joint. So what say you, financial professionals, to this one?
David, do you want me to take this one? I think that you should always have your own bank account and your own credit card. Just know that you might what people might see what's going in and going out of there after. So sometimes we need our own, debit card or credit card if we're going to change our direct deposit, or if we need to put a retainer for an attorney or a CDFA. Just know that moving money, from a joint account over, or any incoming or outcoming, could be open to review from, either side of the transaction. So yes, have it, but just know that there should be full transparency moving forward.
Yeah, it's still a marital asset.
Yeah, and there's another question that sort of touches upon, what can I do after divorce has started? And I can only speak to New York law, and then I'll speak about just good practice. But New York law says once a divorce action is filed and the party who didn't file has served the documents, everybody's on notice that there are rules and orders of good behavior financially in New York. So you can't give away marital assets, destroy them, hide them, incur debts, or acquire new assets, unless that is in keeping with your ordinary customary practices during the divorce. So certainly, if you've operated a business during the divorce and you buy and sell things because of that business, you can keep buying and sell things even though that business is a marital asset. So you want to keep your financial activities in like keeping with custom practices and within the realm of what's reasonable and necessary. And anything unusual, because there's digital and paper trails about everything, will eventually be uncovered, even if we need a forensic person like Dave Consigli to track that down and document that things have been secreted and bad financial activity or behavior has happened. But as a practical matter, it doesn't, stop you from operating your normal financial affairs. That wouldn't be sensible, because divorces can sometimes go on many months and sometimes years. So you can still have money in and out of accounts. You can still charge things. You can still buy and sell things if they're within the normal
Right.
category.
Have had cases, like I know one collaborative case, there was an issue because someone went out and bought furniture because they had rented an apartment, and it was more the issue of the communication of buying the furniture than that they had to buy furniture. So even if, regardless of whether it's collaborative or litigation, communication is still key.
Absolutely. And I think when in doubt, ask the professionals that you're working with. Is this transaction likely to run afoul of the court orders? That's a question for your attorney. Is this transaction likely to make me look bad in the eyes of the judge, even if it's permissible in the rules of what you can and can't do financially? So we always coach our clients at the very beginning and kind of remind them throughout that we don't want them to do, say, or to be part of anything that might reflect poorly on them in the divorce, because that is not helpful. So, if they have a question about a transaction, they're invited to talk to us first before they do that. We don't want it to look like you're doing, monkey business while your divorce is going on, or just before the divorce. This comes up a lot. People think they can move things around and hide things and whatever. That's going to be found out. So even though that if there's no action started, that's not violating any law or rule of the courts in New York State, it's still likely not going to be something your divorce attorney would have wanted you to do, because we'll figure it out. The court will know about it eventually. So I guess the other question for the financials is, what happens to retirement accounts as part of the divorce? And, do you guys want to give any special advice about that or information about that?
The retirement accounts get analyzed to kind of see where you are on the marital balance sheet, how uneven they are. And they often get equalized, and they don't necessarily have to be 50-50, right? But an equitable distribution that is could be done by either a quadro or a DRO, which will involve the court order to make sure that it goes from retirement account to retirement account. And that's really important. So it is not a taxable event. And so oftentimes people start panicking and they're like, okay, so I'm just gonna take a withdrawal from my 401k and send it to my husband and then I'll keep the house. And I'm like, no, you can't do that. So there's a lot of rules and regulations around retirement accounts, but it is important that they maintain in their qualified status in order for there not to be any consequences for you.
Yeah, as Melissa said, the quadro is what transfers it to the other person's name without any tax consequences. It's really important that the wording of the divorce decree is in compliance with whatever the quadro is, because those can get messed up. Those can get messed up too. As far as it's an asset and it goes in with all the other assets, as CDFAs, we really, our job is really to give people options, not to tell them what they should be doing. It's like, what's important to you and how do we divide these assets to come to a conclusion of, what's equitable for everybody.
Correct.
Let
Go
me
ahead.
add, as a California lawyer, I want to mention that there's 10 states that are community property states, in which case it's assumed to be 50-50 if it was earned during the marriage. And it's good to prepare yourself that your retirement may actually be our retirement. Equitable division has more wiggle room to it, but it often comes out similar. I just want to make sure that in California, it's community property division and several other states, but not most states are equitable division. So thanks.
That's a very good distinction. Thank you, Bill. So I also want to highlight something Bill alluded to, is that if it's earned during the marriage, right, it's part of the marital estate that can be divided in some fashion, equitable distribution or community property, but it's subject to being divided. If you worked for a long time in a pension plan or a company that has a pension plan, and you had 10 years in before you were married, and you put another 15 years in during the marriage, the 10 years you earned before the marriage is lopped off for consideration of the value that's on the table as marital. So you haven't lost all in equitable distribution states. I don't know if that's different in community property states. Sounds like it isn't. So you have to understand that, and that's where getting the records and the documentation and all that is really important, so that your attorney and your financial folks have a really clear understanding about, is there a portion of your retirement on your pension or your retirement savings types accounts like 401ks, 403bs, or IRAs. If you had money in those accounts before the date you married and now you're getting divorced, you're going to get some of that value lopped off that you contributed during the marriage. So that's really important. And the whole mention of a qualified domestic relation order, or quadro, in the divorce world, that's another area where my law firm customarily brings in an expert, because they're finicky. Every plan is different. There's nuances, and some language can be perfectly fine for 10 pension or retirement plans, and you get to it, you send that language out to the 11th and they reject it. And they reject it 8 or 9 months after you sent it to them because there's a backlog in their quadro review department. Then you've got to go back and ask the court to reopen your matter to give a new amended quadro. So it's just really good to get a quadro consultant working with your legal team. So the language in your agreements are clear and correct, and the language in the order, the quadro order that is going to be signed by a judge, which is going to direct your pension plan or your retirement account plan to transfer certain funds to an IRA or an account of your soon-to-be former spouse. So that's a really important thing. Don't do it alone. Unless your attorney also says we are, experts in quadro preparation, suggest politely or not so politely that your attorney, refer you or let you bring in a quadro consultant to get it right at the outset. Sometimes people do these agreements and they don't go to the next step to get a divorce for years. And then, when they submit the quadro, the things are changed, or they get now there's a different plan. The plan has been taken over by a new plan administrator, or all sorts of stuff, or the ex-spouse who has the pension or retirement has put their retirement papers in and you didn't know it until after the fact. Big problems can arise when you defer those things and don't think of them upfront in your agreement and get that order done and signed at the time of the divorce, because then you can be prejudicing your rights to get your fair share of retirement if it has already gone into pay status before you put your order in. So
Yeah, I think the timing on that, Deborah, is super important. And I always suggest that they get a pre-approval, right, for the quadro, and
yeah.
that the language matches, because if
Mhm.
there's one word off, right, they can get rejected. And if you don't know, it's a costly mistake to
Mhm.
delay the quadro after the stipulation is done.
Yeah, we leave that to the experts. We're pretty smart lawyers at Whitson Law Firm, but we leave the quadro work to the people who understand and keep abreast and on top of all of the changes in the laws concerning retirement divisions and the language that the particular plans want to see, because they have every right to reject an order, even if it's signed by a judge, if they don't like the language of it. It doesn't comply with their rules, and they make up their own rules. So really important thing to point out. And with that, I think we've covered all the pre-submitted questions. Sorry about that light going on in the background. And the ones submitted live while we were here. So I want to give a big thank you to my invited guests who participated in this boot camp. I hope all of you watching it now or on recording are finding value. We're sending in the live event page, or posting in the live event page, contact information, website links, the presentations from the presenters tonight, and just about everything you might need. But you can always reach any one of us directly, because you're going to have our names, our credentials, our emails, and our websites to inquire about services, to get questions answered, or to access. Most of us have websites that have free or low cost informational resources that you can dive deeper into on any of the topics that we've touched upon in a high level way tonight. So does anybody else who's part of the presentation team want to say anything? Or
Thanks for having us.
Absolutely, my pleasure. Good night, all. Good night, viewers and future listeners. And we hope to get to help you all if you're going through a divorce. Take care.